Excellent. Okay, that's great. So this is a live webinar. So it's, what day is it? It's Wednesday, isn't it? So it's Wednesday, the 28th of October. It's 12:30, just past in the afternoon. And this, the purpose of this webinar is to walk through the phase 2 of High Street Hull, which is our project, which is going to go live on the platform to be funded tomorrow. So for anyone listening in who has invested into phase 1, nothing has changed with phase 1. So hopefully there was no confusion with any communications that went out this week. It will start to become apparent why there's a phase 2 of this project. And yeah, you'll start to realize that as we go through, and feel free to ask any questions in the Q&A or the chat if you need anything clarified as we go through. Okay, perfect. So that was just everyone saying they can see. That's great. So let's get started. Okay, so first off, we tend to just do a bit of an introduction. Anyone who's maybe joining one of these for the first time. So as I said, that's me in the top left-hand corner there. I'm Stephen Wallis, the Operations Director at Source Capital. This team is made up of a blend of different people who bring various skills, experience, and expertise to every project that we put through the Source Capital platform. The directors share over 100 years of property experience, and there's over 20 years of financial services experience as well within the team, covering investment banking, payments, consumer lending, peer-to-business lending, peer-to-peer property lending. I'm actually a former chief risk officer of a bank in Malta. I've got a risk qualification as well from the Institute of Risk Management, and yeah, I've worked across many areas of it, but my focus in the last few years has been peer-to-peer. So I was actually on the board and credit risk committee of a peer-to-peer business lender until earlier in this year. And I've been investing personally in peer-to-peer property investments for the last few years, I think about 3 or 4 years. And I really wish I knew at the time the difference between peer-to-peer and crowdfunding. So peer-to-peer is lending, it's a loan, whereas crowdfunding is where you're an equity investor. So essentially you're going to share some of the profit from that project, but you won't have the security that's on offer with peer-to-peer. And also, you know, those terms can overrun, and it's unlikely you'll be able to get any penalty interest or payment. So yeah, there's quite a big difference, although the two terms are often used together and I suppose switch around a bit. But yeah, there is a big distinction. Peer-to-peer lending is lending, it's a loan, it's debt. Crowdfunding is equity. Okay. So yeah, we also, as I say, I've got my own investments. A lot of other people in the team have as well. We continue to work on our own developments. I've got shares in a property company around Harrogate in the northeast, for example. And as property industry leaders, we use our experience by carefully selecting projects and overseeing them, ensuring they're the best projects for investment for our Source Capital investors. So here's just a few of the teams. I just said there, I'm in the top left. Stephen Moss, our managing director. I think a lot of you will be familiar with Stephen, and you may have met him before. John Wilson is often your first point of contact, our relationship director, if you're coming through the platform or being introduced to someone in the team. And we've also got obviously other people in the team, such as Emma and Paul. So we've got flagship developments across the UK with a pipeline of over 277 million. I think that was 280 million, I think I saw the other day. We've got over 100 offices across the UK, so this is our franchise network. So there's actually about 115, 120 now of these, and these are people who have been through our training program, and they've learned how to become full-time property developers and investors. And those are the people who are outsourcing the projects which come through Source Capital. So this is something that's unique in the industry with us, is that we only lend to our own network. So it's not just some developer somewhere who's got a great project who runs it by us. It's only our actual network that we lend to. So we've got 100% repayment success to date. We don't charge any fees to investors, so that's nothing to get into a project. We don't charge any management fees, and we don't charge you anything at maturity either. And we offer up to 12% returns on your investment. I'll explain a bit of how that comes about a bit later. And it's also important to note that our investments are suitable only for sophisticated and high net worth investors. This was a change that was made in December 2019. the Financial Conduct Authority made some changes and determined that peer-to-peer investments is only open for those types of investors. But for our platform and for others, there is a way that you can show that you are sophisticated, and that's by completing an appropriateness test, which you must do in order to register on our platform. It's also important to note that your capital is at risk and there's no financial services compensation scheme protection with peer-to-peer. So just a little bit about our values as well. So customers are at the heart of everything we do. We're fair, transparent, and want to continue to improve our service, providing a higher level of trust to our customers. Our vision is to make investing in property much more simple and easy. So we have a commitment to our customers, we're transparent, we take risks seriously, we are honest, and we value diversity and innovation, and also are constantly seeking to improve what we do. So a bit about the borrower for this particular project. So it's sourced Scarborough York. Sarah Corrie-Pearce is who we're going to speak to today. And the developers have been working on other refurbishments and other projects. And that's what brings them to the platform to raise money for these funds. So a credit check's been completed, as has a financial review, and anti-money laundering checks are always completed as well. So yeah, as I say, we're going to be speaking to Sarah today. So Sarah's actually been, she's project managed a number of refurbishments in this area. We'll speak to Sarah shortly. I'll get her on to explain a few of the fine details about this project. She's obviously also the borrower of High Street Hull Phase 1, which is on track and running smoothly. We might talk a bit more about this during this webinar, but Sarah and I were actually over at the site a couple of Fridays ago, I think it was. I'm in North Yorkshire, so it's not too far, about an hour down the road for me to go. And yeah, and so everything, yeah, we met with the project manager, we had a look around, took some videos, went through all the plans as well, just to see how everything was going to be looking once it's completed. Yeah, and everything is going nicely and according to plan. So yeah, for this reason, we've got confidence that the rest of the building will be completed on time and within budget. And again, I'll explain in a few minutes a bit more of the detail around this particular raise and the creation of the additional 4 apartments, which is going to bring the total number of apartments in this building to 12. So the main contractor, is Dot Build. You can check them out online to see. And yeah, as I say, I met some of the team while I was over there a couple of weeks ago. Okay, so for anyone maybe who doesn't know where Hull is or doesn't know much about it, I think I first it came onto my radar when it was got the Capital of Culture Award back in 2017. It's a very pretty city. Yeah, there's an old town which this is located within, and it's also well known for things like its connections. So it's a major port city in the UK, so a lot of things, a lot of products and business goes in and out of that port. And for that part of that reason, there's been massive investment into the city. So there's this 70 billion transport plan. I think we also say in a few slides the amount of money that's been added, or the sort of value that's been added to the city over the last few years as well. So here's the building itself. So it's 41 High Street. It's actually got a huge amount of history and heritage. So it dates back to the 17th century, this building. So Crowell House, and the aim obviously for us is to take it into its next, or sorry, for the borrower, for Sarah, to take it into the next phase of its life by creating these high-end apartments. You'll see some pictures shortly about the high-level spec that's going to be implemented in these apartments. The current state from phase 1 is that it's now all stripped back. I can vouch for that. I saw it, and works are underway to completely create the new apartments. So the property gained planning permission to convert the first and second floors into 12 self-contained apartments, and that will be consisting of 1 studio, 8 one-bed apartments, and 3 two-bed apartments. It's important to note, obviously, as well, this is SAS compliant for those who've taken control of their pension through that vehicle. Yeah, this project is compliant from that point of view. So here's a CGI of the outside. So yeah, I was there the other week, and if you look sort of from left to right, so left is the front that you just, or sorry, just sort of in that second bit there, you can just see that's the front that we could just see on the last picture, and then all the way to the right is where there's the warehouse at the end. Now, what you can't see, but it's just beyond that fence on the right, is that's actually the river right there. So yeah, some of these apartments have got really nice terraces or got very nice views. Yeah, and you'll also see there's quite unique aspects to all of the apartments, which I'll let Sarah talk about in a little while, because I think that's part of the reason why there's been big demand for the from investors, sorry, to purchase the end units. Yeah, so here's some of the pictures. I won't go through all of these in too much detail, because I might lose you, especially in the floor plans, which are a bit small, but you'll be able to see them better if you request the deal pack. But yeah, things like you can see the spiral staircase there. So a lot of these apartments are split over 2 levels. You can see there for this one as well, there's a small roof terrace. Yeah, I mean, even though there's there's still a lot of work to be done, I could see the vision and what they're going to look like when I was there a couple of weeks ago, and it's really impressive. As you can see here, here's a picture just showing the high level of spec, and I suppose that open living that a lot of people are looking for these days. Okay, so I'll just stay on this slide just for a little while. So we can see there, so there's yeah, you can see the flats 1 and 2. In fact, yeah, there we go. So it just says there the ground floor and first floor for flats 1 and 2. And again, we haven't gone into the detail of how this is changed. The plan has changed from 8 to 12. It's in some of the summary before we get into the numbers, so I'll wait till we get there. But yeah, so you can just see there's the spiral staircases if your eyes can see it. You can see the bedrooms as well, and the layout of the open areas with the kitchen and the lounge. So yeah, hopefully this gives you a feel for how these are going to look from this side and the ones earlier. This is just to, I suppose, confirm and show that all the drawings have been done for each of the flats. So here there's 3, 4, 5, and 6 in here. If you can see, just 3 at the bottom, 6 up the top. And as you can see, ground and first floor, and that's because a lot of them, as I say, are split over 2 levels. Here you can see 7, 8, and 11 as well. And 9, 10, and 12. Yeah, obviously this will all be within the deal pack that you can request to see it in more detail. And there's the overall picture of the floor plans, which is maybe a bit too small to see on this PowerPoint. Okay, so a bit more about Hull. So yeah, it's got, as I say, it's got some of the UK's best international business connections due to its location. It's close to the M62, which is a major motorway for those who don't know the north that well. So this runs from Hull, I believe it's where it starts, and it goes all the way to Manchester and Liverpool, across the Pennines via Leeds. So it's a major road connecting a lot of cities across the north. There's been £3 billion public and private investment into the city since 2013. A lot of that, I suppose, would have been in the lead up to the capital of culture, but it's ongoing as well. It's a major port city, and as I say, there's this £70 billion transport plan for the north, which will only benefit the city. The property itself, so where it's located within Hull, so it's a 10-minute walk to the main train station. It's a 5-minute walk to the marina, yeah, which is really easily accessible, and there's loads of bars and restaurants and things like that. It's a nice part of the town. It's set within this old town. I think there was a museum that was about 50 yards away when I was there, yeah, in the centre with fountains and various things was about a 10-minute walk away. The location probably couldn't be better, I think. So here's some information also about the property prices in the local market. So previous webinars I've done recently, actually, the 2020 numbers were down year on year, which wasn't particularly surprising because of COVID. So those are other parts of the country, whereas actually this is the first one where I've seen that prices just keep going up. So you can see over the last year, it's up about 3%, but even that 5 years up 8 and 5 years up 17%, which I think just shows that this part of the UK is still doing well and is still strong, especially from a property price point of view. Yeah, and here's just, this is quite a nice little chart for anyone who's familiar with these ones, where you can just see the average price for a 2-bedroom property in the area. So it's 109,000, which confirms the price. The GDV, gross development value, is at, you'll see it's at 545,000 for these 4 apartments, which shows that 125 to 165 range is realistic, and especially when it's linked back to the high quality of specification and finish and the location. So just from a legal point of view, conveyancing has been carried out there by Pinkney Cromwells, and the charge is registered on behalf of Source Capital and it's been completed by Loosemore Solicitors. Okay, so we'll get into the detail now. So Sarah, I'll get you on shortly. I think just there's just a couple of bits, and then especially the chats you've had with investors, we'll get you in for those bits. But for now, just the high level. So the borrowers have purchased the building already. So in June 2020. So the phase 1 was earlier this year, a few months back. The phase 1 raise was done through Source Capital for a total amount of 647,000. And the plan at that point was to convert it into offices along with 8 self-contained apartments. Now, back in June 2020, and especially the months leading up to that, when I suppose the strategy was getting put together, we weren't really sure how COVID was going to play out. I think some people probably thought that, well, yeah, we'll work from home for a bit and then everyone will be back in an office. And obviously that's not what's happened. So the developers, so Sarah's decided to convert the offices into apartments. It's deemed that the office space was no longer in such high demand because people are allowed to work from home for the foreseeable future. So even outside of the tier stuff that we're going through at the moment, I mean, so many of my friends I speak to, they've been told they never have to return to work, basically to an office, sorry. And so, yeah, I think that just, it sort of changed the thought process around, okay, well, should we actually just build out further apartments here instead? So, yeah, and when, no surprise that when that change of mind was considered, there's a higher gross development value when you create the extra apartments as opposed to having office space. So that's what we're talking about today, is to complete this phase 2 to build out the extra 4 apartments. So for that, the borrower is raising £251,000. Planned exit is to sell the apartments within a 9-month period, which obviously, no surprise, it ties in with the end of phase 1, which was a 14-month term. So this generates an estimated profit margin of 48% on the sale of the apartments when we're just considering this new raise. So investors get a first legal charge on the site, and nothing will change for the phase 1, and phase 2 have exactly the same security. The drawdown of funds will be released in stages upon the submission of monitoring survey reports confirming work's been completed. We share those reports with investors so you can see what's happening as the project progresses. The exit plan is to sell the apartments which have already gone on the market off plan, with viewings already taking place and there's strong demand. Okay, so the loan amount is 251,000. The GDV for this part of the project, this phase 2, is 545,000. The interest rate that will be paid is 10% per annum, but there's bonus interest of 2% per annum on investments over £20,000, which just so happens to tie in with the annual ISA allowance. The loan term is 9 months. Repayment of interest will be at the end of the term, and from a security point of view, there's first legal charge plus personal guarantees. And there is borrower's equity, which was put into the project during phase 1. So the exit is to sell off plan, but there is also the opportunity to refinance as well. Planning has been approved, and also RICS independent valuation has been completed. It's SAS compatible. It's also ISA compatible. The minimum investment is £250. And it's just important to note that obviously returns are not guaranteed, capital is at risk. and obviously the loan term may not always be that same term that we say here. Okay, so we've already mentioned the total loan required. The finance costs are £33,822. The developer profit after finance costs is expected to be £260,177. And we've just also always stressed that GDV a bit, just to see what would happen if there were to be a 10% drop or a 20% drop. But obviously in that type of scenario, that's when the refinancing is probably preferable for the developer. If they're not keen to actually sell at those reduced prices, and they just hold them for a while and then sell when the market recovers. But providing that refinancing is possible, then that's how the investors will get their capital plus interest returned. So the loan to value to GDV is low. It's 46%. And as I say, the forecasted profit of GDV is 48%. Take a minute to stop and check. No questions yet. Okay, great. Okay, so as I said, so the exit strategy is to sell off plan between £125,000 and £165,000 each. You can actually already see some for sale there. So anyone who's maybe already on the laptop and wants to bring up Rightmove, you can find the link there, and it'll obviously also be in your deal pack for any people who want to go and take a look at these that are already for sale. Okay. Interest, just to confirm as well, interest is repaid with the capital at the end of the term. There's no payment of interest throughout that 9-month term. Okay, so there's a few ways that the loan is secured for investors. There's a first legal charge, which is registered against the property for the full loan amount by the solicitors acting on behalf of the security trustee. Property values can go down as well as up, so your capital is at risk. The borrower signed a personal guarantee and has contributed £125,500 towards the purchase of the property in the previous raise, phase 1, and that's why we haven't seen any borrower equity on the previous slide for this particular phase. The funds are released in stages, as I mentioned, and also Source Capital is the trading name of JARC2 Limited from a regulatory point of view. And JARC2 is an appointed representative of rebuildingsociety.com Limited, and you can check those numbers on the register during your due diligence. Okay, so investors have, as we say, the first legal charge. I like this this slide always because it just shows what we call this safety margin, and it's basically how much there is, I suppose, in the deal before the investor capital is touched by even a pound. So you can see there's this nice chunky profit. There's also the interest, and yeah, so that would have to be eroded by things like the sales price not being as expected, the build costing a lot more, but we already know that the build is on schedule and on budget, and all of those things would have to play a part before the investors' capital is touched. Okay, so yeah, just to confirm as well, these are forecasted values. The capital is at risk. There's no FSCS protection with peer-to-peer. Okay, so maybe at this point, actually, because we're talking about security in the exit, I'll just, if you just allow me just to give Sarah bring Sarah in. So Sarah, I think you're on mute at the moment. If you're on mute, I think hopefully we'll be able to hear you. There we go. Sarah, can you hear me?
Hi, Stephen. How are you?
Yeah, good, thanks. Sorry, I'd normally let you talk a bit before I just carried on, but I thought we'd get to the point about the exit because I think this is probably the main thing investors are thinking about. I think the security is quite clear. We can say, well, we've already explained that the project is on track, but when we were talking earlier today, you said there's actually been interest from investors who are looking to purchase all of the units. Is that right?
Yeah, I've got a conversation later this afternoon with a couple of investors who are interested in purchasing all 12 apartments. I spoke to the selling agent as well this morning, and since they've been on Rightmove, there's been a flurry of activity. There's a lot of investors contacting them as well, so it's definitely moving in the right direction.
Okay, brilliant. We just had a question here in from Boone. The estimated pound per square foot of the renovation costs of this phase. Yeah, Boone, do you know what? You asked that on the previous one, didn't you? I should have made sure we included that in the deal pack. Do you mind if you contact John Wilson afterwards? And I think we should be able to dig that out of the documentation, but unfortunately I haven't got it to hand today or right now, sorry about that, Boone. But yeah, pound per square footage, yeah, we can definitely get that for you. Okay, great. And then yeah, Sarah, obviously we met up at the site a couple of weeks ago, but you've been there a few times, and I guess there's been no real concerns. I don't think the guys have had to stop working for COVID reasons or anything. They've been able to continue as planned, haven't they?
Yeah, I mean, when I go there, the Stuart, who's the project manager, he's very COVID conscious, and he always makes sure that people on site are sort of adhering to the rules and regulations and whatnot. But it's moving ahead so quickly. I can't believe the change already. All the steel frames are up and they're starting on the staircases, and you can definitely see a difference between when we first had a look at the property and the initial valuation of it and what we could do with it.
Yeah, brilliant. And I think yeah, I mean it was great to walk around. It's a lovely building, and these spiral staircase and all these other really nice touches I think are going to make it really attractive. And I think maybe for people who don't spend much time in the north, those price points seem really low. They are what have been, I suppose, told to us by the RICS independent valuation. This is what we've been told, but some of our other projects, they end up either selling very quickly, which this one might do in all one go, or the local estate agents end up saying that they're actually worth a bit more. So I think that from what we've seen, obviously past performance is not a reliable indicator, but with other projects we've had, I think a lot of the valuations valuers are being conservative this year. That's no surprise because there's some uncertainty, but at the same time that the market is bucking the trend. And I think for anyone who follows the news a bit at the moment, you'll see that actually a lot of parts of the country are holding up well at the moment in terms of sales. Okay, so Sarah, oh sorry, go on, Sarah.
No, I was just going to say, I think because we're doing the apartments to the same spec as the CGIs, so when people see the CGIs and they know that they're going to be the same, roughly the same outlook, then it just adds to that overall selling quality.
Yeah, I definitely agree. I mean, yeah, it's they are high. These are high spec in a nice part of Hull. Okay, thanks, Sarah. I'll stick you back on mute for a second just so I can carry on with a few of the other slides we've got, and then I might just bring you back in again at the end. Okay, so just a bit more about the support network at Source. So for anyone, again, where this might be your first webinar where you're joining us for one of these project launches. So the network will assess the project and they will help to manage the launch. We'll facilitate the project through the Source Capital platform. So essentially the network help and support the borrowers such as Sarah, and then it comes over to the Source Capital part of the business for the credit risk assessment. They then support the borrower at each phase of the project as well. I suppose our role is more from the lending point of view, and from the regulatory point of view, they're more on the support side. And the guys in that team have over 100 years of property experience covering sourcing, development, sales and lettings, and funding as well. So we have some special offers for investors into this project. So we have a bonus interest, which is whereby if you invest a minimum of £20,000 into a single project, you receive an extra 2% per annum return at the end of the term. So I mentioned earlier that it's 10% per annum or 12%. So this is how it works between the two. So as I say, that ties in with the ISO limit, and that's into a single project. That's where you receive at the end of the term. Okay, there's also a £50 bonus. So that's a one-off, whereas the bonus interest could be project by project. So you invest a minimum of £500 and receive £50 cash back at the end of the term on your first investment. And again, just to reiterate, your capital is at risk. Investments are subject to our terms and conditions. Peer-to-peer investments are not covered by FSCS. And if you'd like to find out a bit more, you can find our risk statement there on the website. Okay, there's different ways to invest. So there's a regular investment. You can invest instantly online from £250 and get that return of up to 12%. All loans are secured by the registered first legal charge against the property, including obviously for this project. There's also an IF ISA, the innovative ISA, that's for peer-to-peer. You can select individual loans and invest up to £20,000 tax-free per tax year. Tax treatment depends on individual circumstances. We're not advisors, and obviously things can be subject to change. For those who've taken control of their pension, you can invest through your SIP or your SAS, and this comes with the flexibility to select the individual loans that you lend to. So how to actually get involved? So you can visit sourcecapital.co, you can register, pick a project and invest in up to 12% per annum. Yeah, okay, so question here from Martin. How's the first charge security work for the 2 phases? Have those who lent as part of phase 1 had their security diluted? No, they haven't. So there is a first charge, and it is offered up, and it is to all investors. So regardless of how much you invest and into which phase, you will have that first charge. It's held on behalf of all investors by the security trustee. So no dilution, Martin. Okay, we also have a refer a friend scheme. You can earn up to £250 by inviting a friend to invest with Source. Simply share your referral code found on your dashboard, and there's just a breakdown as to how you can earn up to that £250. It's £50 for investments of £1,000, £100 for investments of £5,000 plus, £150 for investments of £10,000, and £250 for investments of £20,000. So this particular project will go live on our platform at 10 AM tomorrow on Thursday, the 29th of October. You can find it directly by going to sourcecapital.co/projects. And you can contact us in any of these ways. capital@source.co is our email address. There's our phone number, and there's the website. I'll just double check to see if there's any other questions come in. No others come in. So I'm just going to bring Sarah back in. There we go. Sorry, the button won't work. So Sarah, yeah, I think hopefully that's given a good overview. So essentially, phase 1, the funds were raised back in June. Everything is progressing as planned. The plan was changed from 8 apartments plus an office now into 12, which has the planning already agreed. And we've seen obviously some of the spec of what's going to be what the apartment's going to look like. And essentially, this raise is to complete those 4 apartments.
Yeah, that's right.
Okay, great. So the loan to value for phase 2 is irrelevant. True LTV is the whole project. Yeah, okay. So Martin, yeah, we thought we might get this question. So yeah, the LTV, yeah, not sure if I'd say irrelevant, but yeah, I think to give the full picture. So the first raise, the LTV was 63%. So this true LTV that you asking your question is 57%. I hope that helps. Yeah, so obviously this, yeah, these phased raises might create extra questions that we don't have for others. So if you do want to discuss anything in more detail, John Wilson is the person that you can contact. So if you get in touch in any of those ways or with John directly, you can access the deal pack and you can ask any questions you want, and John will be happy to answer them for you. Okay, so. Okay, brilliant. Okay, great. Thanks, Martin. Okay, if there are no other questions, I think we'll leave it there. Thanks very much for giving us your time on this Wednesday lunchtime. And yeah, we hope to speak to you very soon. And yeah, we hope to see you again on another one of these webinars. All right, thanks very much. Thanks as well, Sarah.
Thanks. Bye.
Okay, thanks. Bye.